Hi, welcome to Economy and Markets TV. I'm your host, Dave Okenquist, Senior Research Analyst here at Dent. Joining me is the founder of Dent Research and the editor of Boom and Bust, Mr. Harry Dent. Harry, good morning.
Oh, nice to be here, Dave.
Absolutely great to talk to you, Harry. I wanted to talk to you a little bit about what's been going on in the markets. Had more turmoil that's continued. Recession fears have been going up. Of course, we've been getting these yield curve inversions. Maybe we'll get one every week. We'll see what happens. I know you've been writing about how we're kind of hitting on a critical point in the market. So maybe how do you see things now, and how are you sort of what's your big view here on what's been happening?
Yeah, well, in the dark window scenario I've been talking about for like over a year now, either we just kind of take a little break here and then go right back up towards NASDAQ 10,000, nobody expects that, or we take a bigger break. The reason I say that is we have this mini-megaphone pattern over the last couple of years where we keep making slight new highs, but of course, in every downturn, slight new lows. And that would project that we could go down as much as 25% from here. On the other hand, if we break up into this dark window, which would just mean slight new highs, we'd be in a whole scenario breaking up 25%. So this is very critical. And now it's gotten down to this right now. Fed Chairman Powell's getting ready to talk this morning. By the time you hear this, he will have said something.
Yep.
And the markets are likely to start to break one way or the other. We've been in a 120-point range on the S&P the last couple of weeks, 1,000-point range on the Dow, going sideways. That little sideways channel says the next break should either be up back to the highs in July, the all-time highs, or back down to the recent lows in early June. So if we start heading one way or the other, it's likely to keep going. And if we break those above those new highs, then we're up in the dark window towards 10,000 NASDAQ. If we break below, we could go as low as 5,700 on the NASDAQ. So it couldn't be more critical. And that's why I keep talking about this stuff, and we'll keep you updated. And then again, you're probably going to see some action in the market today by the time you get this.
Yeah. Now, Harry, things have been very news dependent. And a good example is, of course, this morning, China is scheduling some retaliatory tariffs. And then, as you mentioned, Powell's Jackson Hole speech at the Fed symposium. Now, I mean, how much of this is news dependent? And at one point is maybe the fundamentals or just, the structure of this thing going to maybe move less so on the news of the morning or pre-morning?
Well, if I look at the patterns in the market, I hate to say it kind of favors the downside. In other words, the way the smart money's been acting would tend to say things are going to break down or not. But yes, right now it's totally news dependent. China trade deal, market up. If we get more impasses or currency war, market down. And of course, the opposite for gold. Gold will do the opposite. Gold wants a currency war, and gold doesn't want a trade deal. And the bonds are driving the whole thing, because they keep going lower, saying, I'm sorry, stock market, I know how optimistic you are, but we see a declining global economy. And that's why Trump is bending on Fed Chairman Powell to stimulate ahead of the trends. So that's that. I mean, if Powell says, no, I'm going to be a dutiful Fed chairman and I'm going to wait and be cautious, markets aren't going to like that. If he says, you know what, we're getting more and more, we're seeing more weakness, and we're getting quicker to pulling that trigger and doing something more substantial, markets are going to like that. So short term, and there's not going to be a China trade deal short term, very unlikely. So it's likely to stem a lot on how the Fed reacts and how the bond markets. I still think the bond markets look like they're going to go lower in yields, which is telling the stock market, look out, recession coming, which is telling the Fed, oops, yeah, you should step on the gas.
Yeah, absolutely.
I don't want us to do that, but that's what the bond market's going to be telling.
Yeah, certainly. Thank you for that market update. For Harry Dent, I'm Dave Okenquist, and this has been Economy and Markets TV.